Everybody, it's Shannon from alphatrends.net. Today's Friday, the 3rd of January, 2020. The markets were kind of mixed this week and starting out the new year where we left off last year, obviously. So let's take a look at the charts and make some sense of it. The S&P 500 here on our daily chart remains in a very strong uptrend. I think that it's important to probably keep an eye on this trend line. I'm always of the opinion that breaking a trend line just means a slowing in the rate of ascent in the case of an uptrend line, not a reversal. So it's an important level. This is our really, level that we want to see hold probably into next week. 319 to 320. We're still in a primary uptrend. We're seeing a little bit of volatility. Nothing to be concerned about that I can see. The volume weighted average price from that gap on the 16th is where this market opened up today and found buyers. So again, this remains our important level of near term what has been support and should continue to hold. A failure to do so would likely lead to a little bit more profit taking, and I think that's all it would be, is profit taking, not a reversal. The NASDAQ is still clearly in an uptrend as well. We closed, we've only closed higher once than this, and that was yesterday. So nothing to be bearish about. Here on a 30-minute time frame, you can see the volume weighted average price from the 16th is also an important level. So keep that on your charts. That comes in about 212.5. The Russell 2000 did underperform a little bit this week. You see that market was down 0.5% for the week and is year to date, 2 days in, negative. But it is holding the key volume weighted average price level that comes together with the volume weighted average price from this gap down and that low. So I think that this week we had what should be an important low area. If this level fails to hold going forward, then we'll reassess. But again, the primary trend is still clearly higher in the Russell 2000, but we are below declining 5-day moving average. That just tells us to be more cautious on this market. Don't be in a hurry to buy the Russell 2000 while it's undergoing going profit taking. Semiconductors closed at a new all-time high on Thursday. Today they backed off a little bit. Kind of the same pattern we've seen over and over again. As long as we remain above 140, the intermediate term trend remains bullish. The Biotechs, as I had pointed out numerous times, especially to subscribers, that when a market breaks out, a so-called breakout because it made a new multi-year high by moving past that 2018 high, you have to ask yourself, where has it come from? In the case of the Biotechs, they had run from 97 to 123. Close to a 25% move higher, and they were clearly extended. And people who buy those breakouts usually end up regretting it because they failed to assess risk properly, and part of risk is, where has the market come from? Up 25% and then a breakout is generally a place where you're going to get trapped, and we see that on the 15-minute time frame here, we're stuck below a declining 5-day moving average with lower highs and lower lows. Let's look at that on a 30-minute time frame. So here's our lower highs and lower lows on a 15-minute time frame, and on the daily time frame, maybe we head down towards that 50-day moving average. I don't think that would be a horrible thing for this market. The volume weighted average price from this gap is in that same area. We could also draw a volume weighted average price off the last time that was tested, and we're kind of right at it. So this whole area is looking like an important zone to potentially find some support. If it starts to turn sideways and the 5-day moving average flattens out next week, then I think you can start to look at the biotech group overall as a place to put some money to work, that is. The financials still, they're in this range. They had made a new all-time high on Thursday, backed off a little bit today, right down to the rising 20-day moving average and back into this range. Overall, we're still in a primary uptrend. I don't see any reason, nothing here tells me that we're likely to reverse. We've got the volume weighted average price from that December low right here as well, so at the bottom end of that box. So, they remain bullish. We're just seeing a little bit of profit taking, kind of gyrating above and below that 5-day moving average. This is a better look here on the 30-minute time frame. And by the way, I've always got the time frame listed. It should, actually, it's, I'm sorry, I did it. Here's the 30-minute time frame you can see right there. So that's what we're looking at. I'll square that up better next time. Gold was the big winner, so far, and once it broke that volume-weighted average price from the peak, it really took off, and that's of course after holding the volume-weighted average price from the lows. So keep an eye on those important volume-weighted average price levels. Nothing changed other than the calendar this week. We're still in a bull market. We've got a lot of stocks that are extended. They're up a lot. It doesn't mean they can't continue to move higher, but be careful about managing risk and chasing stocks. And hopefully, regardless of what the market does in 2020, you have plans and strategies and you're disciplined enough to adhere to those, and you know what your time frame is to engage in the market. For me and what I provide at Alpha Trends each day, it is swing trades. That's what we do. If you haven't taken a look, please do so. Have a good weekend. Thanks for tuning in.